Let's do a case study on a massive M&A deal just announced. Now, in this case study, what I'm going to do is I'm going to explain three topics. Part one, meaning topic one, is how Morgan Stanley and Goldman Sachs investment bankers structured the deal. Part two, I'll discuss how hedge funds invested in the deal after it was announced in New York and Australia a couple days ago. And then what I'll do is in part three, I'll talk about how the company conducted a brilliant quarterly earnings call to discuss this deal with investors. Now, I want to stress that we as retail investors legally have access to the exact same information at the exact same time that hedge funds do on deals. And what I'm going to do is I'm going to teach you today how to access and interpret the data very, very quickly, even faster than how the media does, so you don't have to rely on the media to tell you about what deals happened. And you can also interpret the deal data based on what I'm showing you, so you don't have to rely on anyone else's opinion. Okay, so the case study deals with technology payments company Square, ticker SQ, and Square's announcement to purchase the largest technology company in Australia named Afterpay. And the ticker on Afterpay is APT.AX in Australia. Now, Square is buying Afterpay for $29 billion, and it's an all-stock deal for about a 31% premium. And I'll run through the logistics of this deal as well. Now, the stock movements of both Square and Afterpay were fascinating and incredibly volatile over the past couple days. A lot of money's been made, a lot of money's been lost as well. So let's kick it off with part one, the investment banking structure of the deal. Now, the CEO of Square and Twitter is named Jack Dorsey. He's the CEO of both companies, Square and Twitter. He's brilliant. And a couple of months ago, before the massive $29 billion deal here was announced, what Jack Dorsey did was he hinted to investors on public webcasts that Square might be looking to make an acquisition in the payments sector. And that's a smart move because by doing this, the shock of an announcement of a massive deal would not cause investors to panic sell. So listening to public webcasts was not just the investors that day when he had that webcast a couple months ago saying he was going to make an acquisition. But listening to that public webcast was also likely investment bankers from Morgan Stanley, Goldman Sachs, and Catalyst Partners. Now, Morgan Stanley is Square's investment banker, and they spoke with Goldman Sachs and Catalyst Partners about Square wanting to do a big deal. And as a result, Morgan Stanley, who advises Square, structured the acquisition of Afterpay. And Afterpay's bankers are right here, Goldman Sachs as well as Catalyst Partners. And if you're not familiar with Catalyst Partners, it's run by a brilliant man named Frank Quattrone. He's the best technology investment banker in history. And every big deal that occurs, he's part of. Now, the premium that one company pays for another company in an M&A deal is usually 25 to 30%. And quite often, one company buys another company using their shares instead of cash or debt because they know their shares are overvalued. So it makes sense to use the overvalued shares as currency for the acquisition, especially in this market where valuations are egregious or quite high. So why did Square's share price rise a lot after they announced this massive deal? And why do they need to buy Afterpay? It was fascinating because Afterpay is not profitable, but Square is, yet Square's stock price went up a bunch. I'll explain why. So in terms of the background on the companies, we know that Square processes payments with those white little plastic things plugged into iPhones. They also have terminals as well. We know they process payments. And a massive growth market is payment processing now for those that are having financial issues, especially now during COVID. So Afterpay, which is also a payments company, they make a product that collects money from those having financial issues, usually in 4 non-interest-bearing payments. And this is called BNPL, and this is important. BNPL stands for Buy Now, Pay Later, and it's a wonderful growth opportunity for many companies. So Afterpay is not profitable, but Square is, and this makes the deal fascinating, especially how Square and Afterpay shares traded after the deal was announced. which we'll cover in part 2 of this short case study when we talk about hedge funds. And then in part 3, we'll discuss Square's brilliant investor relations strategy and how to analyze the deal. So when a deal is announced, by law, what happens is that companies have to tell all investors at the exact same time. The professional investors actually don't have an advantage over us retail investors. And the way companies tell all investors about a deal or a material event at the same time is they do this through a press release called an 8K. Now, we know that a 10K is an annual report, a 10Q is a quarterly report, and 8K is an important press release. Now, instead of us relying on the media to tell us about the deal, we can actually beat the media to it and analyze the deal much, much faster. And I'll show you how. So let's take a look together at the 8K for Square, where the deal was actually announced. Step 1, you go here to sec.gov. sec.gov, okay. Step 2, what you do is you go to, and let me make this a little bit smaller so I can actually see the menu there. You go to more search options. And then step 3, what you do is you enter in the company name or the ticker here. So in this case, I'm going to enter in SQ for Square. Okay. Then we go down here to the 8K, this document here, and we open the 8K by clicking on the top link here. It's not the best website, it's government, but it works well. All right. So in this press release here, when we scroll down, we can see the terms of the deal. And the terms of the deal are that Square is going to purchase the deal. They're going to give shareholders of Afterpay 0.375 shares of Square. Okay, and I'll explain this in more detail right now. There's a lot to this. It's complicated, but it's fun nonetheless. So if I own 1 share of Afterpay, then I receive 0.375 shares of Square. Now, the deal was announced on Sunday, August 1st. So what we're going to do is we're going to analyze the deal based on the price that day and prices over the past couple days. So at that time, on Sunday, August 1st, let me just get to the price of Square here. And the way you do that is you just go to finance.yahoo.com. Let's go there from scratch together. And then once you're here, you type in SQ. Then you scroll down to historical data right here. Okay, great. So on Sunday, the 1st of August, the price was actually 247.26. July 30th was a Friday. So the price on Sunday was still 247.26. And we're going to go through some investment banking math in a second, and I'll explain this to you in more detail. Okay. Now, what I also want to do is I want to get the historical price of Afterpay. Okay, and so I went to Afterpay, which is apt.ax. That's their ticker here in Yahoo Finance. Then we go to historical data, and we see here on Sunday, the price was 96.66. So what I'm going to do now is I'm going to run through the logic on this deal and how the mathematics works per the investment bankers. So if we take Square's price on Sunday, August 1st, of $247.26, and if we take Afterpay's price of Australian dollars, 96.66, and we multiply them, what we actually get is 92.7225. Wait a second, we're thinking here that number, 97.7225, is not a 31% premium to the price of Square, of Afterpay, which was 96.66. So what's going on here? Well, the 92.7225 is in US dollars because $1 gets you about $1.36.12 in Australian dollars. So what we're going to do to put this into constant currency, meaning put it in Australian dollars, is we're going to take the exchange rate of 1.3612 times 92.7225 US, which explains the 31% premium right here. Now, please remember that number, 126.21, that Afterpay shareholders got. Okay, remember that number, 126.21. So what I want to do is I want to look at the 5-day chart now of Afterpay. So if we go here to Afterpay, and then we go just to summary, and we can look at the 5-day chart right here. Here we go, good. this is how the stock moved. Okay, so this is Sunday, Friday, Saturday, Sunday. Markets don't obviously trade on Saturday and Sunday. Okay, so what happened was the price of Afterpay jumped to 123.05. You see the black number on the right there. But wait a second, this is less than the $126.21 purchase price. Why is that? Well, it's because unless there is another company expected to bid for Afterpay, it has to trade at a discount to the price until the deal is approved. And the reason is that there's always a risk the deal will actually not get done. And usually what happens is with investment banking deals and with M&A, it takes about 6 months for a deal to close, just in case the governments in the United States, Australia, and other countries block the deal. And governments block deals if the acquiring company is getting too much market power, because competition, we know, is great for the consumer. Now, in the financial technology market, the Department of Justice in the United States actually blocked Microsoft's acquisition of Intuit back in 1994 because Microsoft would be way too powerful in the finance tech markets. So let's now go back to the 8K here. Okay, so I'll go up here to the 8K. And I'm going to search here for 2022, and I'll tell you why in a second. Here we go here. All right, and there's a couple instances. Yeah, so it says here the closing of the transaction is going to occur in about 6 months, okay? In the first quarter of 2022, subject to satisfaction or waiver of such conditions, okay? So this is, we see a discount to the price that Square wanted to buy Afterpay at, and then eventually that discount will close, okay? Remember the time value of money. The discount will actually close once the deal is approved by the regulators, blessed, and it closes in the first quarter of 2022. Now, separately, if we search here for the word termination, okay, termination, we can see here there's 7 instances. Let me get to the right part. Here it is here. Yeah. Okay, great. Yeah. So if the deal does not go through, then what happens is there's going to be an egregious fee that is going to be paid. I'm looking for it. I'm buying time here. Here it is here. There's going to be a $385 million in Australian dollars fee that Square is going to have to pay to Afterpay if the deal doesn't go through. Now, let's go back and let's talk about part 2. We're done with the investment banking stuff for now. Okay. So part 2. In part 2 of the case study, we'll talk about how the stocks traded as fast money accounts like hedge funds invested in the deal after it was announced in New York and in Australia. There's a lot of moving parts to this, which makes it a lot of fun. So what I'm going to do is I'm going to look at the 5-day chart again of Afterpay, okay? And we'll see how the stock traded. Okay, a lot of money was made and a ton of money was lost as well. So if I go here, we see here that on that Monday, the first day it traded, the day after the deal was announced, okay, we see that that Afterpay's stock actually pulled back and closed on Monday, August 2nd, at $114.80. And this is way below the purchase price of $126.21. What happened? Why did the deal pull back? Well, the Australian market closes at 4 p.m. Sydney time, okay, which is 2 a.m. New York time. So when the market closed at 4 p.m. Sydney time right here, okay, so when the market closed at 4 p.m. Sydney time on Monday, August 2nd, the price of Afterpay was $114.80. And it was lower because Australian investors thought that Square's price was going to go down a lot when the U.S. markets open in New York, as this is a massive deal for a company that is not profitable. Square, we know, is profitable, but Afterpay isn't profitable yet. And so Sydney, again, is 14 hours ahead of New York. And here's what really happened, though, which absolutely shocked investors and made hedge funds lose and make a lot of money at the same time, depending on what side of the trade you're on. So what we're going to do is we're going to look at the 5-day chart of Square. Okay, so we go here to summary for Square, ticker SQ. We go to 5-day right here. Okay, and you could see here that on Monday, August 2nd, Square's price actually went up $20, which was shocking. It went up 20 bucks at the open, and it closed the day at 4 p.m. New York time at 272.38 or so. And this is $25 higher or 10% higher than the share price of Square when the deal was announced, because Square was 25 bucks lower at 247 bucks. And recall the deal was announced on Sunday, August 1st. A lot of moving parts. So let's go through the math again a slightly different way. All right. So if we go through the math, 272.38, okay, times 0.375 times the FX rate of 1.3612 equals a price per share now of $132.78 for Afterpay. That's a lot higher than before. Remember that number. Okay, remember that number right there, 132.78. Now, if we look at the 5-day chart for Afterpay, let's go back there quickly. If we look at the 5-day chart for Afterpay, we see that when the stock opened the next day at 9 a.m. Sydney time on August 3rd, the price jumped to just under $130. There's a lot of moving parts when it comes to international markets, and when certain markets are open and certain ones aren't, and when it comes to also volatility given FX. So it didn't go up to $132.78 because, as we discussed a minute ago, these investment banking deals, they can take 6 months to close. And there's a risk that regulators might not approve of the deal. It's complicated, but it's fun because the Australian markets are open from 9 a.m. to 4 p.m. Sydney time, which is when the US markets are closed. So there's an immediate arbitrage opportunity that hedge funds and quantitative funds transact on. They make a lot of money. And the way that hedge funds transact on this is as follows. What the hedge funds do is they have groups or departments within their hedge funds, if they're big, called event-driven groups or sectors. And so through the event-driven arbitrage trades, what happens is you have lawyers that work at these big hedge funds. And what they do is these lawyers often used to work for the government looking at antitrust deals. And these hedge funds and the lawyers in the event-driven department of hedge funds, if they think the deal's not going to go through, then they don't take part in the deal. But if they think the deal is going to go through based on their policy analysis, then what they do is they short in size the company doing the acquisition, which is Square, and they go long in size the company getting acquired, which in this case is Afterpay. And they make money on when that spread closes, if and when the deal is approved 6 months later. It's deadly, though, because you can lose a fortune if you don't do it right in a hedge fund, but you can make a lot of money, too, if you lever up. So let's now move on to part 3 of the case study, as we're going to talk about how Square conducted a brilliant quarterly earnings call to discuss the deal with investors. So here's a few reasons why Square's price opened much higher than expected on Monday morning, August 2nd, New York time. Now, what I'm going to do is I'm going to show you Square's investor relations website. And whenever you want to look at investing in a company, you have to go to the investor relations portion of their website. And let me just go from scratch. So if you go to Google, Square Investor Relations, you can get access to their investor relations website. And this contains tons of free information that we can go through to thoroughly understand how the company is doing from a financial perspective and a qualitative perspective, as well as what their strategy is. So if we go here to Square's investor relations website, we could see when we go to events and presentation, if we scroll down, we can see that before the market opened, okay, on Monday, August 2nd at 8 a.m. New York time, before the market opened, they held a conference call with investors, okay? And in this webcast conference call, they did an amazing job of explaining the massive Afterpay deal to investors. And what they also did, which was genius, was they also released earnings at the exact same time. It's a brilliant strategy to announce earnings and the details of a deal at the same time and before the market opens. So what you can do is you can make investors feel great about the deal instead of panic selling. So here's how it works. Large publicly traded companies have investor relations departments. And these companies release earnings every quarter, meaning every 3 months. And quite often they hold a conference call to talk about the results. And the quarterly results are also in a press release. And anybody can listen to the conference calls online, and anybody can get access to the press release as well. So let's go here. I want to go back to Square's homepage for their investor relations website. And what I want to do is I want to open up a document that they shared with investors and went through during that call before the market opened on August 2nd at 8 a.m. So right here, we've got a document called Square Plans to Acquire Afterpay Transaction Overview. And this is fun. Now, here, this is a 27-page deck that was created by Square and the investment bankers to convince shareholders or articulate to shareholders that the deal makes sense. Okay. Now, what I'm going to do is I'm just going to jump through this quickly. I'm going to go to page 5 here. And here we can see that the total addressable market for online payments and the BNPL market, buy now, pay later, is $10 trillion. Okay, and BNPL, meaning buy now, pay later penetration, is only 2% of this right now. So here, BNPL. That's a big deal. So next up, let's go to slide number 9. And what we're going to do is I'm going to look at the revenue. Here it is here. Cool. All right. Here on slide number 9, we see that Afterpay's revenue growth is an astonishing 92%. It's unbelievable. This company is growing like a weed. And let me wrap this up by going to slide 15 here quickly. On slide 15 here, we can see that the integration of Afterpay's technology is really easy to do as part of Square's Cash app. See right here? It's really, really easy to do. And all this stuff is getting Square investors excited about the deal, even though Afterpay is not profitable yet. Now, what you can do is you can always go to Square's or any investor relations page and listen to events. Okay, what they do is that they put these webcasts up and they leave them up for usually a couple weeks. So you can listen to a replay of the whole thing. Anybody can do it. All you have to do is put in your name, register, and you can listen to it. And when you listen to these calls, what I want you to please do is I want you to listen not just to what the management says, but more importantly, I want you to listen to the questions that the analysts from the big investment banks ask during the Q&A portion. These calls are usually 45 minutes. The first half hour or so is the investor relations person and the CEO and CFO talking about business and how the quarter went. And the last 15 minutes, the top investment banks analysts ask questions. So you can listen to this anytime. Okay. And in the replay, they also talked about in this conference call the quarter they had, and they materially beat earnings actually in the quarter, given the growth of their Cash app. So what happened was, in hindsight, this made investors feel more comfortable with the fact that Afterpay is not yet profitable. And the earnings they beat earnings by a bunch. It actually offset a lackluster net revenue print or result for Square, because Square was adversely impacted by the volatility in Bitcoin's price. But the bottom line here is that the timing of the deal and the timing of the announcement of earnings and the deal at the same time was brilliantly executed. Now, if this was helpful, please like and subscribe, and thank you.